Evening, everybody, and thanks for watching. My name's Patrick LaChapelle. I'm working more on my stock market tool to make automated picks in the stock market. Today was the first day of paper trading, which is very exciting. I've gone live with these three models here, and I'm going to continue tomorrow. So what I'm going to be doing today is looking into how did these perform, how do I document these, how can I automate it. And preview, I have an issue, which is a pretty substantial issue. So I'll get to that in a second. I'm going to start by going over the project, the overview, the outline for my strategy, and what I've been doing so far, what I've run into on recent days, and of course the paper trading. And then I'll get into kind of what looks wrong with these, and then I'll start working on that. And I'm hoping I can troubleshoot the problem tonight. And this was a bit of a false start at paper trading. I'll get to that in a sec. But if I can fix these problems tonight, then tomorrow will be try 3 at the first day of paper trading. I actually tried paper trading Friday. That didn't work. Tried Tuesday. That didn't work. So here we are. We'll try. We'll see if we can get Wednesday to work here. So goals for the project. I have 2 goals. The first goal is to beat the S&P 500 by a significant margin while staying market neutral. So the S&P goes up on average 6% per year, and that's the average. So there are down years and up years. 2022, the S&P trended down all year. If we just pull up the S&P chart, oh, I don't have internet pulled up, but yeah, let me pull that up really quick. So SPX. Oh my gosh. S&P's at 7,500. I mean, that's unbelievable. That is unbelievable. So anyway, you see there's some down years. So like 2022 is the example I just gave. It basically went down the whole year. You have 2007 from mid 2007. So I guess 2008 it was going down all year. 2022 it was going down all year. And so when those sorts of things happen, I don't want to beat the S&P, but also beat the S&P in drawdown. So if the S&P falls 3%, I want to still reliably be getting money from this strategy. So in order to do that, I'm doing a market neutral strategy. I'm trying to predict longs and shorts, how I'm trying to predict the best and worst performers relative to the market. And that means that we don't care about what the market does. We just care about the spread between the best and the worst. So I'm writing all of this code in Python. So my second goal is to generalize this code and open source it. It's on my GitHub if you're interested in that. You can go check out the link in the description. Download it, fork it. Let me know how it works. Let me know how I can improve it, and also what features you'd like to see added. And of course, if you find it helpful, please star it. But this whole strategy that I have at the bottom here, I'm implementing that in about 100 lines of code. So that's kind of the power of this model. I've already worked out all the survivorship bias, look back bias, all the different biases, make sure everything's working well, and making sure that it has all the sort of tests that I could possibly want. So the first step is to isolate a universe of stocks. So you don't want to train the model on everything. Basically, you're just not going to get a good model. Different stocks move differently. So the classic example they give is common stocks like Apple or Tesla are going to move differently from ETFs. And also, I want it to work on high volume stocks. So I'm filtering out the bottom by dollar volume. And that's really because I want the strategy to be scalable. If it works for me, then I can get it funded at a quant shop or a hedge fund. And they will pay me, they will, give me a cut of their profits. But that will only be the case if I can show that the strategy is scalable. So it needs to only be working on high dollar volume stocks. So I've gone through, I'm not going to go over the models or the portfolio strategies today, other than to say that I guess I'll talk about the best portfolio strategy. So, where is it? Yeah, so this is the first model. So this is very simple. I'm just going long on 4 and short on 4. And so Doing 4 positions on each side gave me the best results. Let's actually ask the AI real quick. I'm working on a portfolio strategy which will allocate capital based on the output from my LGBM strategy. Allocate capital based on the output from my LGBGM strategy to predict returns over the next 5 days. Did I feel like I put this in a PowerPoint somewhere. I mean, in an Excel file somewhere, but I guess I didn't. Okay, I don't have it, but okay, so LGBM strategy to predict returns over the next 5 days. I am using HRP for allocation and am positioning long/short to be beta neutral. The best results. Hey, MD Nomanug. How are you? Hi in all caps. That's intense. An intense way to start out the stream. What are you up to? Are you interested in the stock market? You like Python? You want to make money in the market? What gets you going? You like geopolitics? Noma Nug, that looks like a Vietnamese name. Is that accurate? Are you Vietnamese? The best results are when I use 4 shorts and longs. 10 longs and shorts does poorly, as does 1. What conclusion can I draw from this? I'm just wondering, because I haven't really thought too much about this. So kind of what I think at a base level is it's kind of concerning if 4 positions is doing best. Really, you would think if you increase positions, you should just get good. That looks like Kanye. Kanye used to have the good music stuff. All caps. Oh yeah, I was showing the PowerPoint. So yeah, this is the first strategy. Basically, 4 positions on each side works best. I implemented a couple other strategies. Oh, this is a lot of things. Okay, so this is basically I changed the volatility estimator. The volatility estimator that I had was a simple rolling volatility estimator. That's what you see in the blue. But that's very noisy and not very accurate. So I got a couple different estimations, the EWMA, exponential weighted moving average, and then also the Yang Chang volatility estimate. And Yang Chang is what I'm going with because it's more constant across the regimes. You see, if you look at the exponential weighted moving average in this early regime, it's really low. It's hovering about like 0.2 to maybe 0.25. And then on the later regime, it's really high. It's hovering around 0.4. So with the red line, you see that's not the case. This is hovering around maybe like 0.35 to 0.37. And here it's hovering around like 0.42. So I want something where I can, yeah, I want to like to learn, but I still didn't find any structural way where to learn, how to learn. My name is Safin. Hey, Safin, how are you? I guess I already asked it. Anyway, hey, Safin. Safin or Safin? It looks like Safin to me. But, Just start talking to AIs, man. Just say, how do I don't even know what you want to learn. Markets, Python. Talk to talk to the AI about it. And then you have to use your brain. That's the big thing with AI is it only works when you talk to it if you use your brain. But basically, I implemented different volatility scalars, um, and I found that this actually, I'm not improving the strategy in terms of the Sharpe ratio, but it is very effective at lowering volatility while still keeping returns high. And the nice thing is we can basically set the target to whatever we want. Um, so that one I showed right here, where is that? This one here is without any volatility target, so it's unscaled. And these strategies are scaling down when the volatility drops or goes above the target to try to bring the volatility back down to the target. So um, the nice thing here is basically whatever you set the target to, that's going to be the volatility and also the return on the strategy. So if I want 10% return with 10% volatility, I can set the target volatility to 10%. Uh, just pick your percentage of returns and volatility that you can tolerate. Um, and so, yeah, this basic strategy is what is the first one. And so you see, oh no, not that strategy. This strategy. So you see the returns are like enormous, but the drawdown's also very big. So I would have had to tolerate a 35% drawdown during the COVID recovery, and that would have been hard to tolerate. So um, I'm not sure if I could have tolerated that. And also, if you have a 35% drawdown, you're not going to get funded by quant shops. So with the interest of getting this strategy funded, I set the target to 10%, and now the worst drawdown is 10%. Um, yeah, so that's pretty good. The worst drawdown's 10%, and the annual returns are about 10%. Uh, I am also using a 30% target. That's the last model. And you see here the annual returns are about 30%, and the worst drawdown is 28%. So these are my three models. Now, yesterday I ran the live strategy to get ready for paper trading them. Um, and here are my outputs, and here are the positions I took. But something that's kind of concerning is, yeah, so then I looked at these stocks. So let's go look at PBM to start. Yeah, so see that? That's $4.49. So the idea is this should only be picking stocks from my universe. Um, but if you look at how the universe is defined, I'm filtering out everything that's below $5 a share. So that shouldn't be in my universe unless unless maybe it was $5 before and then it fell below $5 after. Aha! That's exactly what happened. So it was above $5 on May 1st. So actually, I take it back. Let's look into these other stocks. This might not be a problem. Okay, so Allbirds, 1 month. Yep, so that was in the universe. BNAI stock should be in the universe. HTCO. Oh, hold up. Let me just go to the universe. Let's just pull this up. We'll just do this in Python. All right, let's get out of here. Okay, so import pandas as PD. df is equal to pd.read feather / data / universes / 7.feather. Okay, and let's say df dot let's get data frame where data frame dot date is equal to, oh, so that's the whole universe. So when I get Oh, the universe is saying, all right, so let's say df where df.date. I want to make a quant framework and put it in Python code to run for me. Is it possible? I have right now zero knowledge. I have the best thing. I know exactly what to do for you. All you have to do is go to the repository in the description. All the code I've been writing, I've said this a couple times, but I just keep hammering this point because I've spent so much time writing this code and it's really robust. So, you basically have access to 6 months of my work if you get the repository. And so follow the instructions on there and then talk to some AI. I like Google AI, Gemini Pro. Uh, that's I've found that's the best AI for me. But Claude's good. ChatGPT kind of sucks as of several months ago. Maybe they've gotten better. But yeah, just give the code to the AI and tell it that I want to make a quant framework. And actually, don't even give it the code. Just say, hey, I want to make a quant framework. What do you think about using this repository? Maybe it has a better idea for you. But the real bottleneck here is making all of this structure. Actually, let me know. I've had the idea that sorry, I'm trying to think. 2026-05 dash 05 dash 01. All right. Yeah, so let me know what you think about this idea, because I've spent all this time building up this framework. I was thinking about just making a website that anyone could use to generate, basically do this for themselves without writing any code, just clicking buttons. So is that something you'd be interested in? Yeah, Gemini I think is the best at coding. Um, Claude, I just so far I think Gemini's the best. Lots of people like Claude better, and different AI they're getting different scores. So what's the best AI right now? Yeah, I don't know. It's Gemini. It says the advantage is it works well with Google tools. That's not the advantage. It's the best at coding. It's the best at reasoning. But that is Google, so maybe they thought it would be biased if they said that. All right, so let's get where the date. All right, so let's call this filtered, and then we'll say, let's get filtered where filtered dot account symbol is equal to bird. Very good. And then let's do for symbol in, let's just put these symbols in, PBM bird BNAI HTCO HCAI AKAN AXTI. I have a mean reversion strategy. Can you implement it? And if it needs any kind of modification. Well, how does it work? What's the data you're using for mean reversion? What's it work on? What kind of assets does it work on? All right, so let's say for each symbol, print that guy. So we want to print that. Oh, but not bird. We want to say symbol. All right, so I take it back. These are all in the universe. So since I only have 3 strategies right now, I'm going to track it manually. So that's actually really good. I thought I had a problem. but I don't. So where's the paper trading? So honestly, let's just get rid of this. Let's make a new one. So this is the 27th. No, we started yesterday on the 26th. All right, so target volatility equals 10%. I'm pretty sure, what did I do here? I think it's 30%. Oh, 25%. Okay. And then let's copy that. We'll make one here. Call it target volatility is 25%. All right, so let me see if I could just do this myself. So live strategy, outprint, save targets to output. So what's that output look like? It's not even in Explorers. All right, let's just run it. DF today. What is DF today? Okay. Positions, account symbol side. So where is this sim? For sim, W, and long waits dot items. So if we have DF today, short values by predicted return. Okay. Then we could say that, and we could say prediction equals DF today, where DF today, what am I sorting by? DF today, predicted return. Where df.today dot account symbol is equal to sim dot predicted return, I think it was called. I took it from SSRN research paper and made it with AI. What is SSRN? The problem with research papers is if there's like it's an open market, right? So if there's some edge that somebody could, if there's a true edge that somebody has in a research paper, it's one of three things. So either they've already implemented it to, or if someone publishes a research paper, it's really three things. One, they've already made a lot of money off it, and it's been implemented for years in the market without us knowing, the normal people. And then they publish it because they lost their edge or they don't care about it for some reason anymore. The second thing is that there's not really any edge there at all. Or the third thing is it's some crazy person who doesn't care about money. But for people who are motivated by money, it's kind of hard to publish anything unique in a paper. So DF today. Predicted return, yeah. So of predicted return dot values. All right, then let's print prediction, and we'll say prediction equals prediction dot values of 0, and then again print prediction, and let's save it. Say pred return is prediction, tranche budget. We'll add the same thing here. Okay. So, short weights, we need to do the same thing. But if it works for the longs, it'll work for the shorts. So we can just say that dot values of 0. All right. Now let's see if we get the prediction. Good. So let's put this in. So we're going to assume, oh, I'll just make another tab for the portfolio tracker. So let's say date, type, should just be long or short. We're going to have price, what else do we need? We need position size. Target dollars, target shares, tranche budget. So if I divide this by 10, I wouldn't be able to execute any of the shorts. All right, so what's today's date? 5. Position size. Number of shares. So we want call that buy open price, and we'll call this sell open price, and then we'll call this sell price. And then ideal, return, real return. All right, so let's fill this down. We have 8 positions, so 1, 2, 3, 4, 1, 2, 3, 4. What is the portfolio size I put in here? Aha, so that's it. I put a $3,000 portfolio in hopes little old Pat could trade this. And I could. But let's rerun this for $10,000. Because this won't work on the 100, 1,000, 10,000. All right, now we need to delete that file. We could run this again. All right. Okay, so $10,000. Allocating $10,000. Tranche budget. Yeah, should be 2,000. So, all right. So let's document these. So all right, buy open price, buy price, number of shares we can fill out. 31, 116, 4, 31, 7, 2, 7, 2. Hey, Sir Night Night, how are you? What's going on in your world? I'm documenting up my first day of paper trading. So I need to automate all of this, but really automating it's going to take several hours. I don't have the time for that tonight. I probably won't have the time for it this week, so I think I'll have to. I'm kind of planning on waiting till this weekend to automate it, but we'll see. Um, so I don't need to worry about any of that stuff. I do need to fill these in. Oh, need to put the symbol in. All right, so symbol. Wait, so why is it giving me different output now? Now our biggest long position is TRT. Wasn't it bird when I ran it this morning? Where the fuck did that PowerPoint go? What the hell is this? Oh, I think because I have a volatility scaler, maybe? The fuck is this? TRT. What is that? Oh. Live strat 3, duh. Live strat. Alright, let's try running this. Do we get. Let's see if we get the same now. It should be the same. We should be able to run it a million times, get the same exact output. Oh, and this is going to show the same. Oh, so I'm just showing the wrong one here. Oh yeah, I was switching things up this morning, trying 2 longs and shorts. So live strat 3. We're at $10,000. Let's go 4 longs, 4 shorts. Target volatility. Alright, let's set that guy to false. And we should be good. Do I care about the prediction? Yeah, I do. Okay, so let's put predicted return in. Long waits to items, target dollars, positions, dot append. Yeah, so I'm just going to copy over that change I just made. All right, let's run it with the predictions, because I do want that. PBM bird. Let's see, is it the same? PBM bird. All right, PBM 62.6. Smaller budget. PBM 223, good. 223, 471, 95, 202, 92, 83, 366, 128. Okay, good. PBM bird BNAI, HTCO HCAI, ACAN, AXD, BBGI. Okay, good. Now we got the same. So now we have the predicted returns. So predicted return, let's put it in 0.121587, 0.310563, 0.362826, 0.34229. Okay, now for the shorts, minus 1. Oh, whoa. Way bigger predictions for the shorts. Minus 2.707088. Minus 1.361667. Minus 1.154977. Okay, now let's put the symbols in. This is kind of tedious, but I only really have to do it for the first strategy because all the strategies are the same at their core. The only thing that's different is the target volatility that I'm scaling with. All right, so let's go get the prices of this stuff. So let's start with PBM. My gosh. One day. How do I change the tickers? These are not 1 minute tickers. Is it? Oh, I guess it was. I see, there's a bunch of candles here. I don't think the volume's very high on this. So let's see. Market opened at 9:30. So that's this one. So I don't know, 4.13 I'll say. But then I could assume, I'm just going to take the worst price to buy in the first 15 minutes. First half hour of the market, let's say. But for a short, we would want a higher price. So the worst price is the open. 4.13. Okay, now let's look at bird. So that would have been a bad position. Losing position. First one's a losing position. Let's go to bird. 1 day. So at 9:30 this morning. Oh no, we would have been going long on that. Oh shoot. So never mind, this would have been good. What? BBM. Alright, so the worst price would have been at 10 a.m. This guy. Oh, 957. Okay, so I'll buy at the high here, 4.3. Okay, now let's get bird. Alright, so at market open, it plummeted. So the worst point to buy this would have been at the market open in the first half hour of the day. So let's say 3.89. It's the same for both of those. Okay, let's go to BNAI. So this morning, it opened here. The worst price in the first half hour would have been that. So let's say $18.03. And the idea is I'm trying to have some suboptimal buy price to see, that it's some proxy for slippage. If I'm taking the worst price in the first half hour of the market, what happens? Okay, so HTCO. One day. Opened at 5.63. But the worst price in the first half hour would have been this high. So $6. Whoa. Oh, 5.63. That's not so crazy. All right. So all of those looked pretty good. So let's go to HCAI. Okay, so the open was 9.71. we're going short on this, so this would have been the worst point to buy, right? HCI short, yeah. So 9.71. Okay, now ACAN. One day. So here's the open. And it went up here by 10 a.m. So this would have been the worst point to buy. So it opened here, 22.89. The worst place to buy would have been here, 22.63. Okay, now let's go to AXTI. So, whoa, that would have been a good position for today. So at 9:30, it opened here, 142.69. And the worst place to buy, oh my gosh, 133. Whoa. So it dropped, what is that? That's like 7% in 3 minutes. That's crazy. 939, 946. Well, this would have been the worst place to buy. 133.53. Oh. This should be 133.53. Those should be nothing. Okay, so finally, BBGI. Okay, so we opened on Tuesday of this week. Oh, I don't want to show my calendar. No, stop doing that. All right, so we bought here on the 26th. So that means we want to sell on June 2nd. Okay, so finally BBGI. Let's see what we would have gotten there. Okay, so open. Get out of here. Stop giving me fucking advertisements. One. This is the 1 day. Was I using the right values? Pretty sure I was. We can cross-check though. So let's go. Let's actually just look up. I'm gonna have to pull the data anyway, so. I guess there's just not a lot of data on this guy. $15.50. Oh, so that's Friday. No price here. Okay, we're shorting this. I'm just going to put this price 15.26. Okay, very good. So this guy's all done. We have to cross-check it now. So let's pull the data for today. See how easy that is? Run 2 commands. Now let's go over here. Get out of this. Go to data retrieval. And let's pull the data. Okay, so now it's going to put this into a file for me that I can read. It's going to take quite a while to go through everything, and this is pretty inefficient to do for one day, so I need to fix this. But so let's put these guys in. Sell. All right, let's put, no. Copied cells go here. Okay, let's put 2 columns in. First column is going to say what? Current price. Current return. And then let's do some conditional formatting. Just make it green red. Less than or equal to 0. Make it red. Oh no, let's undo. Just this one. Less than or equal to, make it less than or equal to 0, make it red. And this guy, no, same thing here. So now greater than 0, make it green. I don't want it to highlight current return. Greater than 0, make it green. All right. So let's put the current prices in. Now we have the data. I have to get the universe now, I forgot. Let's just run it here. I'll be right back. I'm gonna go get a Dr. Pepper. It's kind of cold in here. I'm gonna get a sweatshirt too. Shoot, it's 12:17. Okay, we're up to 2021, so we're almost done with the universe. Okay, I'm gonna listen to some music. It is 12:17 in the morning, so I really want to finish this by 1 a.m. So I have 40 minutes to wrap this up by 1 a.m. So I'm gonna put some music in, and I'm hoping that will help me concentrate. All right. So we've got the universe. Now let's go in and look at it. Wait a second. /data/universes/7.feather. Oh, it's CSV. Need to read feather. So what was yesterday, the 26th? Close 4.49. All right, so the current return equals if this guy equals long value if true, it's buy price. No, should be current price times number of shares minus buy price times number of shares. Now, is that right? We made 4.3. Oh, yeah. 13. 20 cents per share at 31 shares. Yeah, about $6. That makes sense. Now let's do. Oh, and what was the open? 4.15. Okay, good. Now let's do bird. $4.49. Close 3.83. Oh, but otherwise if it's short. No, wait, hold up. So here, value of true. But value of false, we want to do let's see, so we're selling short, so it should be just the opposite. Okay, so if you're shorting a stock, you get your initial cash. So you get the initial cash buy price times how many shares you bought. Oh shit. Buy price times number of shares you bought minus current price times number of shares. All right, let's see if that works. So now let's get BNAI. And open on bird 3.92, 3.89. Good, close enough. Okay, closed at 19.54. This closed at 5.68. I lost money because it was so volatile. But if I was able to actually buy at the open, I would have made money. HCAI closed at 9.68. So I made 21 cents. ACAN closed at 23.86. AXTI closed at 132.6. And then BBGI closed at 15.17. So here's the unscaled strategy results. I would have lost 51 cents today. But if I was able to buy at the actual open price and not the worst price in the first half hour, that would have done pretty well. Okay, so now let's copy this whole thing and put it in to the other sheets. And then the only thing I have to change is the number of shares. Where'd that PowerPoint go? Alright, so these are the positions here. So here we would say 38, 85, 3. Why is the return different? Oh, because it's scaled. $38, 85, 3, 25, minus 6. Oops, 6, 2, 1, 5. Wait, why would it only take 2 shares of BBGI? I'm totally confused. Wait, what did it... Oh, BBGI. Oh, okay, that's the last one. So here it was doing 8 positions. Here it's doing 5 positions. So why was that 2? Oh, shoot. This is 5 positions. Oh no, this should be 8 positions. AXTI should be 2 positions. What is this? 38.85. So 8 positions. What am I confused about? Oh, because here it's taking 2 positions. Oh no, that's good. Alright, so 8, 2, 3, 9. I'm totally confused. How did I put all the positions incorrectly? 9, 35, 5, 122, 54. Oh no, I was getting it from here. Oh, but that was the 25% scaled, was it? I just put the wrong 823. Yeah. Alright, so 8239, 35, 5, 122, 54. Okay, good. So net profit would have been, I would have lost $1.50. Now let's check these positions. 38, 85, 3, 25, 6, 2, 1, 5. Minus 225. Oh no, this is target volatility 25%. $10. Actually, I'll just copy this. Okay, now we just have to change the positions. $15, 34, 1, 10, and short on 2, 0, 0, 2. So what if I scale up the positions by 10? Okay, then we could scale up these by 10, so that becomes 150, that becomes 340, this guy becomes 10. Oh man, no, I can't scale it. So how do I implement this? Let's go back to live strat. Change this to be 100K and then get the positions. And we want to get it for yesterday. Oh. Oh, so the positions for today. Wait, hold up. It's the same exact positions? Oh. One day my father told me, son, don't let it slip away. Okay, so this is just, doing the same thing as yesterday, but doing it on a $100,000 portfolio so I can get some actual positions here. My father told me. Wait, it doesn't appear to count your shorts as positive returns when the price actually decreases. Did I do this wrong? So shorts. Thanks, Sir Night Night. Alright, so opened at 9.71. Oh, no, this seems like it's working. Current price is 9.68, open 9.71 positive. Current price 22.89, it went up to 23.86. So that's negative. 133 went to 132, that's positive. 15 went 0.26, went to 15.17. Positive. That's good, right? Told me, son, don't let it slip away. Alright, so I'm just gonna say here, alright, so I'm gonna leave that for tomorrow. Oh, no worries. That's good. That helps because, yeah, if that was basically I'm always missing stuff, so it helps to have people who are attentive. The problem's coming from that line, so I'm just gonna wait and fix that tomorrow because I gotta get to bed. So let's run the same thing: 4 longs, 4 shorts. Use dynamic scaling, false. I'm not looking for somebody with some superhuman gifts, some superhero. Buddy, I can kiss. I want something just like this. That's all I need, right? No. The legends and the myths. PBM, Bird, BNAI, LUNR. So most of the same. Couple mix-ups. Where you wanna go? How much you wanna risk? I'm not looking for somebody with some superhuman gifts. So set that to true. Target's at 25%. I want something just like this. Been reading books of old, the legends and the myths. LA time. My wife said, I can't say no to nobody, and at this rate we gon' both die broke. Got friends that ask me for money knowing I'm in debt. People trying to say I'm going crazy on Twitter. My friend's best advice was to stay low. On payroll, Emilio said it was outlandish spending. The media said he's way out of control. I'm not out of control, I'm just not in a control. Just confirmation, this generation's closest thing to Einstein. So don't worry about me, I'm fine. Alright, so let's drop it down to 10%. Screenshot that. And let's run it. Make sure these are different. 263 at the top, 368. It's Medusa, the ultimate Gemini has survived. Are you looking at the church in the night sky? Now you're looking at the church in the night sky, and you're wondering where's God in your nightlife. Now you're looking at the church in the night sky, and you're in where God and say hi. I feel like I'm on it. Yeah. If the phone ringing, go and get your kids out. He sat back and smiled. But buy a new car, talk about how my neck looked well. 400 years later, we buying our own chains. Real families stick together and see through the mirage. 105, 263, so very good. I am one with the people. I'm one with the people. Real. I've been woken from my late and man's dream. Check your Instagram comments to crowdsource my self-esteem. Let me not say too much or do too much, because if I'm up way too much, I'm out of touch. Alright, so those are the paper trading predictions. Let's see. How do they compare to yesterday's? PBM, Bird, BNAI. We dropped out HTCO and added Lunar. SNDK. Didn't have. Skills didn't have. HCAI still there. ACAN still there. So not too much change day to day. Let's see. We have I guess that's a fair bit of change. 8 positions and 3 changed. So, and we would have lost money today. So, yeah, I have to look into this tomorrow, figure out what to do about it. But that's going to be it for tonight. I got to go to bed. I decided I was originally going to do paper trading streams in the morning before the market opens, but that's just too much for me because I like to stay up late working on this. And really doing stuff when market opens, who cares? We got the predictions for the day here, so yeah, good to go. All right, that's it. Thanks for watching. Have a good rest of your day. Adios. Looking at the church in the night sky, and there where God's gonna say hi. Looking at the church in the night sky, and you're wondering where's God in your night life. Please face me when I speak. Yeah, I have to look into this tomorrow, figure out what to do about it. But that's going to be it for tonight. I got to go to bed. I decided I was originally going to do paper trading streams in the morning before the market opens,